do it. All right, JC, we are live. How we doing, brother?
I am doing fantastic. How are you this beautiful Thursday afternoon?
I am doing well. The markets have got a lot for us to go over. They do not disappoint. All this movement is making me excited. The news, man, there is just a lot going on. So I'm excited to dive in and talk to you. First of all, how has been your week in the markets?
Week's been good. You can see, I don't know if you could see my screen or if you could just see me.
I can see your screen now. I got it pulled up.
You know, one of the things, we had our monthly conference call on Tuesday. This is where once a month we get all of our clients from all over the world into one room, and then we archive it and we record the conversation and the video because obviously some people can't make it live. So it's about 130 charts and about an hour and change, and we just go over everything in the world, rates, stocks, gold, the whole thing. And one of the common denominators was the lack of bullish divergences on daily or weekly timeframes. And what that means is, from any sort of intermediate term perspective, we really haven't seen any major improvement structurally. Stocks made new lows last month, and so did the list of new 52-week lows. So did like the list of stocks and sectors making new lows. Just across the board, no divergences anywhere except steel rebar futures actually did not make a new low, which is like strange because you would have expected that of all of them to make new lows. That one did not. But, you know, I'm really digging deep. If I need to call out freaking steel rebar futures as like the one lone bullish divergence, like, man, I'm digging deep, which I think proves my point. So I don't think we're out of the woods yet, Jay.
That's what I'm picking up what you're putting down. I'm feeling the same sentiment my end as well as I'm watching things. You made calls last, kind of talked about a couple of different markets, specifically gold. I would love it if you've got that chart pulled up, if we can go and take a look at that. There's a fundamentally, as you're pulling that up, there's a fundamentally a lot happening in the background, and pretty much a lot of the different places that I'm on markets, I can't go very far without seeing some mention of that yellow metal, and people are getting excited about the potential. And you broke it down really eloquently last time and the week before. And so I'd love to kind of give an update on that. So I think you've got the chart pulled up. Let's switch over to it. And yeah, there you go. Why don't you break this down?
Yeah, so here we're looking at gold futures, and this was the peak in 2011. Silver had peaked prior to that. And then this was key support, right? Just below 1,600, you know, throughout the latter half of 2011, 2012, and then ultimately that broke in 2013. You see that? So it's support. So what does that mean? That means that there is an overwhelming amount of demand relative to supply at that price. I'm sure the buyers and sellers had perfectly good reasons, but those reasons are of no concern to us. We know for a fact that there was more buying than selling at that price, which is why it kept bouncing, right? That's what that is evidence of. However, once that broke, what that is the market telling us is that now all of that overwhelming supply has now absorbed whatever demand was there at that price. And now there's more supply than demand, of course, and that's when price falls, right? This is a supply and demand game. That's all this really is. It's not like a safe haven. All that's a bunch of nonsense. Storytellers telling people who want stories. But the truth of the matter is it takes more buying than selling for prices to go up, and then vice versa. And that's what this chart really represents. So once that collapsed, that was the big break in gold. And then the bigger the collapse, the longer the need for repair. That's just the way the markets work. So we have been repairing in what we call a saucer bottom. Some of us call it a Kardashian bottom, right? A big solid base, right? Explosive resolutions. And then that has now resolved higher. And, you know, so we would expect those former lows, we would expect overwhelming amount of supply at those levels, which is precisely what happened since the end of last year, since about September. And then a few months ago, we started to break out again. And the next target is back towards those former highs above 1,900. I think that's where we're going.
I love it. Above 1900. There you go. So gold, everybody, you've been making this prediction quite some time. You've been bringing it up week after week. You called that this was going to be a little bit of a breakout. It did. You said that if it breaks above 1600, you want it. It's done exactly that. And I'm glad that your sentiment is still the same, that you're calling for higher prices based off of what you see today. Everybody who's watching us, this is on Facebook Live, and I am with JC Peretz. He is the founder of allstarcharts.com, a good friend of mine. He's a sommelier, which is really, really awesome to know about you. You're also certified in sake, but is there a name for somebody who knows everything about sake?
Yeah, well, I'm a certified sake advisor, if that means anything to anyone, through the Sake School of America. There is such thing as a sake sommelier as well, which one day I aspire to be.
Okay,
I really do love sake, and I love anything Japan. I'm obsessed with everything Japan cuisine and everything like that.
Yeah. So, and for those of you who really know JC, we all know that he became a sommelier to cover up his wine drinking that could be a little bit excessive.
You know, my accountant, Jeremy, my accountant just told me I can write off all of my wine purchases.
No way. All of it?
All of them. That's it, because I have to maintain my skills.
That's it. That's genius.
What can I tell you?
Tax benefits, social disguise. There's a lot more benefits. And what matters to everybody who's watching, if you're here for Trade Stocks, it's because you are also a chartered market technician. There are only 2,500 of you guys approximately worldwide. And we have one on our show, which is so exciting. A chartered market technician is basically somebody who's gone through 3 different levels, 3 different trainings, passed all 3 tests, and has now become certified. They can look at charts, which we'll be looking at today, and they are able to use technical analysis to help predict future behavior. JC, do you have a black box? Do you have some palm reading techniques that guarantee future what's going to happen?
Yeah, it's one of those 8 balls, right? You shake it and it tells you, and it's like, you need to buy Apple. That's what it says. If it had been saying that for a while, we would have made a lot of money. So it'd be nice to have one of those. But no, my crystal ball's in the shop right now, so I don't have access to it. The beauty of technical analysis is that it doesn't give us the answers, right? Nothing does. But technical analysis goes a long way in helping us ask the right questions. And that's what gives us such a huge advantage over maybe a lot of other disciplines. Like, if you're looking at fundamental analysis and you're just ignoring technicals, like you're walking in the middle of the road at night, dressed in black, blindfolded into oncoming traffic. Like, what? You're not looking at price. Like, how do you manage risk? Like, how do you set price targets? How do you identify trends? Like, what are you doing? So to ignore technical analysis, to me, not only is it irresponsible, but I think it makes you an egomaniac to think that your opinion on fair value means anything at all to the market. I think is incredibly foolish.
Yeah, the difference between real money makers and everybody else is the fact that the real money makers understand the price. They understand what the price signifies. And more importantly, they know the indicators that will change price. And so if you're out there, you'll hear JC and I harping on this all the time. If you're an article trader, meaning that you read a Yahoo article and then make it an article trader, I'd say arguably there's a ton of people out there. Well, you've got different types, JC. I don't know if you know, you got the article trader, you got the best friend trader, right? You got the neighbor trader. Okay. And then my favorite is you got the dad trader, right? Well, my dad said that, this and this and this is going to happen, folks.
Yeah, my dad was getting 15% in CDs, in the old days. So like, I'm not listening to my dad.
Yeah, right. Geez, man, those were the days. 15%.
Yeah, but your mortgage was through the roof too. So it goes both ways.
Yeah, true. A lot of things were different Well, we're talking about today, we're talking about the effects of the coronavirus. This is called the Corona Watch because there are a lot of opportunities. Yes, pitfalls, but there are a lot of opportunities that happen in the marketplace every single day. And we're here to find and exploit them. You did have your monthly call. JC, I'd like to turn things over to you. And I'm sure you got some things prepared for us. So before you do that, everybody who's watching, please comment. We want to make this as interactive. This is live. We can see your comments as they come in. We're going to try to answer your questions the best we can. You can even just let us know where you're from. So let us know. We'd love to make this as interactive as possible. The more we get from you, the better content we're going to make. So without any further ado, JC, take it away.
Well, I'm not sure if you can see my screen here, but what we're looking at is a chart of the Russell 2000 ETF IWM. And, to me, this and a lot of other things, particularly some of the stuff I was saying, is enough evidence that we're shorting small cap stocks. So first of all, there's three things going on here. First of all, the one in the green and the red, those are Japanese candlesticks, basically just a very a great way to see what price is doing. We see the highs in 2015. That former resistance, if you will, turned into support at the end of 2018, right? So there's a lot of market memory at that level. Once that broke last month, we have now returned to the scene of the crime. So if the market has proven anything to us, is that right now there's an overwhelming amount of evidence suggesting that the sellers are in control at this price. Let's call it 127 on the IWM Russell 2000 exchange traded fund. That was the top in 2015, the bottom at the end of 2018, and now we broke, and here we are returning to the scene of the crime. We want to be fading these. We want to be feeding the ducks, if you will, and we want to be participating in the selling that's taking place. If the sellers are in control here, wouldn't we want to fight that? No, we want to be, if you can't beat them, join them, right? It's sort of the way we look at it. So that's what we're doing now. We're selling. So if we're going to be shorting stuff, right, we're going to be selling stuff, do we want to be selling the strongest stuff, or do we want to be selling the stuff that the market already agrees should be being sold? And that, in my opinion, is small caps as they continue to make new lows on a relative basis. Small caps have already been underperforming the rest of the market for some time. So this is nothing new from an underperforming standpoint. So logically, if we're going to be shorting stocks, we want to be shorting the biggest losers. And then momentum really confirming all of this continues to be in a bearish momentum regime. No positive divergences whatsoever. So really all of the stars are lining up for a favorable risk versus reward at the index level that can also be executed through an ETF by shorting the IWM very simply, or by buying an inverse ETF if that's the sort of thing that you're into. And I think we get back down under 100. So just a really nice risk reward. And before I go into some individual stocks that we like shorting here, I just wanted to hear your thoughts. What do you think about all that?
I love it. You can't outsmart sentiment. No matter what you try to do, you're not going to outsmart sentiment. So the overall sentiment, or I should say where the majority of the marketplace is in selling. And I love that. So be on that right side. I completely agree. I think that we're going to see, I'd be fading all day long. I wouldn't try to, there's obviously going to be some opportunities here and there. That could be some outliers, but the easy money is going to be in fading this market. And I loved your quote. I'm going to have to steal that, JC. Returning to the scene of the crime. I like that. That was good because that's exactly what we've seen. And it would be like if this was a sitcom right now, we would hear the music. You know or a movie, right? Like, oh no, the music would get creepy again because we're at the scene of the crime. Everything's all coming back. So I love that.
Listen, truth be told, I get all this stuff from like my colleagues and predecessors. I still, my whole shtick is a collection of all like the greatest of all time. I mean,
that's
it's really
everybody, buddy. That's everybody, man. The best comedians would say the same thing. The best actors would say the same thing. Look, there are some legendary people out there, but you're bringing those smarts equation. That does. I'll give as many shameless plugs for you as I possibly can. Here's another one. JC is one of the most well-connected analysts in the world. His client roster involve almost every single one of the banks and institutions in America. Most hedge funds are clients of VCs, and the guy travels the world meeting with really smart people, talking about what they think is going to be the future price of something and why and what are they seeing. So that you're here and you're so cool about talking with our fans and with our community is amazing. So you guys, listen, everybody who's watching right now, we've got a real brainiac on us who's really well connected. So let's take advantage of it while we're here.
Well, I wouldn't say most hedge funds, a lot of big hedge funds, most certainly, most big banks as well. I wouldn't say most hedge funds.
The
Just
ones that matter. When I say most, I mean the ones that matter, JC. Of course, there's like
the
how
good
many
ones, right? The smart ones are the ones that come to us, right?
The smart ones are your clients. That's exactly right. Dude, how many? I mean, no. Do you have how many hedge funds there are? There's hundreds of thousands, maybe. I don't know. I have no idea. So sorry, I have no idea how many. The smart, the most of the smart ones.
The ones that are most logical have obviously come to us now.
Know you.
It's cool, Jeremy, because listen, they're paying us to see my homework. Really, is what they're paying us to do, and I'm happy to share it with them, especially if they're paying me. But it's more than that, because it's the conversations that I'm having. Because they're like, "Oh, JC, what do you think of the dollar?" I'm like, "Oh, this is what I think. What do you think about gold? Or what do you think about retail stocks or whatever?" I'm firing right back, and they're happy to answer. They're a bunch of dorks like I am, so they just want to chat and have someone to chat to. They're normal people too. Just because on Monday morning they have $10 billion to put to work doesn't mean that they weren't up all night watching Sunday Night Football, drinking wine. They're regular people too.
I love it. Great. All right, getting some stock to go over some stuff. I asked everybody that's watching to give us some ticker symbols too. So I'm sure I see these as well under the comment section. But why don't you go see you got the screen and the floor. Keep your comments coming on things that you guys want to see and where you guys are from and any other things you guys want to bring into this conversation. Where anything can happen, JC.
For me, if it ain't broke, don't fix it, right? If we want to short stocks, let's just find the biggest piece of crap that we could find that wasn't able to participate in, one of the best 3-week rallies ever or something ridiculous like that. Like, I've heard all sorts of stats. I'm not like Mr. Stat guy, but like depending on how you gauge the last 3 weeks, like we're in, historic proportions. So if you find a small cap stock that didn't get the memo that stocks just ripped, there's a good indication that there's distribution taking place in the stock, and we want to participate in further downside, particularly on a relative basis. So as you can see here, Republic Bancorp, just horrible, pushing down near 52-week lows, already breaking down to new all-time relative lows. If we're below 27.30, we want to be short Republic Bancorp with a target right below 22.50. Basically looking at 5 points to the downside, 20% profit potential, very minimal risk, because again, we only want to be short if the stock is below 27.30. Jeremy, I can't emphasize enough, if it is not below 27.30, we cannot be short this stock. And I know, as usual, you appreciate that sort of precision when it comes to risk management, no?
I absolutely do. I wouldn't expect anything else from you either. And really, what's a trade recommendation without some specificity, huh?
That's what I'm saying. So let me show you Employers Holdings, EIG, also breaking down to new relative lows. Notice how I keep bringing up new relative lows. Like, we're in a bear market in stocks. We're fading small caps. Small caps are making new relative lows. Now we're going to look for the stocks that are making new relative lows compared to the worst index. So this is the biggest piece of garbage you can find. Those are the stocks we're looking for. We're not trying to be heroes and short the stocks breaking out to new 52-week highs during one of the biggest stock market crashes of all time. That'd be silly, right? We want to be shorting the stocks that did not get the memo that the overall markets just had one of the greatest 3-week runs of all time. The ones that didn't get that memo, those are the ones we want to short.
Love it. I love it. I love it. We got some questions here. I'm going to pull some of this up, JC. One, actually, I'm going to start with the in order. I'm going to pull this one up on the screen here. But it says thoughts on bond ETFs. The train left the station. I've been watching, trying to take all of the knowledge and truth bombs that you've given me, JC, on how to analyze these markets. I'm asking myself, bonds? Question mark. Have they left the train station?
So here's what's going on, Jeremy. You want me to tell you what's going on? I'm going to tell you what's going on. So here's the screen. If you're interested in the bond market, you want to be watching 5-year yields. I know it's not sexy. I know it's not, leading the evening news. What did U.S. 5-year yields do? I mean, Jeremy, how often are you pulling up 5-year yields?
I don't even know if I could, if I know that ticker symbol real quick off the top of my head, right?
For you guys who have been following me for a long time, I know some of you guys are on here. I've always looked at this, not just today. It's been such a great leading indicator for so long. 5-year yields breaking down, buy bonds. 5-year yields breaking out, sell bonds. It's just been such a great leader. I mean, fantastic. And I always give so much props to it because it has helped us so much. In fact, two of the best trades we put on over the last couple of years, over the last 2 years, let's just say, have both been bond trades. And they were both, the 5-year yields were the indicator, a huge indicator amongst many other things that we look at on both of those. So, I owe a lot of credit.
That's why I asked you about bonds, man. You've been making a lot of money off of them. So yeah, for sure.
And you want to know something, Jeremy, while we're on this subject? Hold on. This is really important because we're sitting here taking victory laps and all this stuff. Everything's so hunky-dory. Let me tell you something. Every great trader, every great pro, anybody with gray hairs, anybody who's still in this business after a few decades, they will all tell you the same thing. You have to learn the hard way that risk management is priority number one, and you got to get hit in the stomach so hard that you can't even eat. It needs to happen. And guess what? That happened to me twice in bonds. It was like my worst nemesis. Okay. And it was literally, it was my Achilles heel was the bond market. And 2 years ago, or last year actually, we won the Technical Analysis Award for Best Fixed Income Analyst.
Yes. Yes.
And obviously these bond trades more recently. So it's so hilarious that to me it's hysterical because for me, I was the worst bond trader of all time. Now we're winning freaking awards and the whole thing. So anyway.
There's a life lesson in there somewhere. There's a life lesson somewhere.
Seriously, dude. A bond trade was why I moved to California in the first place. Because I was long the TLTs, long 30-year futures, and long TLT calls. I had the old Texas hedge on, and rates just gapped up on Sunday night, and I was like, just whoo. So anyway, that's another story for another day. But
all right, so summarize bonds.
5-year yield, making new lows. If these yields are making new lows, and we are below those 2012 lows, how are we not buying bonds? The trend in rates is down. I don't know if you got the memo, but they've been going down for 35 years. So it's not exactly anything new. But my whole career, and I'm doing this for almost 20 years now, my whole career, every year people are like, this is it. This is the beginning of the bear market in bonds. Rates have to go up. They can't go any lower. They probably said the same thing in Japan in the 90s, and rates keep going lower there 20-something years later. So, and myself included, I've said it myself. I'm like, yeah, how much lower can rates go? Every Japanese person in the 90s said, how much lower can rates go? Well, guess what? They're still going lower. And can U.S. rates go negative? Sure. My boy, Paul Sienna, he's the chief market strategist at Bank of America, right? Fixed income and commodities and currencies for FIC. And he's on paper, the best interest rate analyst in the world, or at least in the conversation. And he said, yeah, market zero, Smokey. We're going negative.
Huh. Yeah. I wouldn't doubt it, man. Everybody else is doing it. It's becoming the new cool thing, right?
US can't be behind it. So here are 10s, and I know how much you love Fibonacci, Jeremy. Look at that. From the lows to the highs and that extension level. literally to the penny. I mean, you can't make it up, guys. So
that's beautiful.
does that hold? I don't know. And then here's the bond. So here's the trade. If we're above 123, gotta be long bonds. I think that's the trade. You can even argue 122, but let's call it 123. If we're above 123, this thing's got another 15 points of upside. Interest rates go negative. What does the stock market do in that type of environment? I think it's getting smoked, and we'll be taking profits on our shorts, I hope.
Love it. I hope that answered your question, Jeff. Thank you so much for asking. I'm going to go and pull up one of these three. You can do one of them. I've got the QQ, LEN, and GILD. I like putting you in the hot seat, so to speak, here on the fly. Here's the cool thing, you guys. This is not stuff that, there's a lot of, gurus out there and investors who, like you said, can tell a really good story to say why something's going to go up or not going to go up. All right. Very few people I know would go on live Facebook and be peppered with ticker symbols and start saying, hey, what are your thoughts on something? But not you, JC. You do not shy away from showing off your skills.
Jeremy, I can draw these charts for you if you really
I know.
I know what they look like.
I actually, you know what? One of these days when we're in person, you can share some of your good wine with me, and I'm going to start drawing charts. I'm going to draw them. You got to tell me the ticker symbol.
Got it. All right.
We'll make some type of a drinking game.
I'll tell you the vintage and everything.
There you go.
All right. What are we looking at? What's next?
All right. GLD, LEN, and QQQ from George.
All right. So we talked about the gold, but since we mentioned the QQQ, why don't we mention something that really, we mentioned it last week, but I think it's really worth mentioning again, and then I'll get to another point. This is gold versus the Nasdaq here. Let me share the screen. This is gold relative to the Nasdaq composite. So gold futures is the numerator, the Nasdaq composite is the denominator. Obviously, just a great trend to the downside of the last decade almost. This chart basically shows if you've been in gold instead of stocks over the past decade, you should either look at your charts upside down or, reevaluate your process, right? Because stocks have been in a tremendous uptrend over the last 10 years, particularly relative to precious metals. Now, what did we have? We had over the last year or so a beautiful, healthy consolidation. This is the type of stuff they teach you in technical analysis kindergarten, like on the third day, I'm telling you. Consolidation within a downtrend, below former support. Like this thing has breakdown written all over it, right? And then what happened? It broke out. And that in and of itself is the signal. And that really has my attention in precious metals. The fact that this is a close-up, the fact that this consolidation did not resolve lower, it resolved higher. That's the signal. And then this is gold relative to the rest of commodities. Just to show you just how bad commodities have been. Gold is just absolutely ripping. This is basically, by the way, energy is a third of the CRB index. So this is basically the chart of gold versus oil for all intents and purposes. And oil's been destroyed. And then the point that I wanted to make, by the way, this is gold versus oil. See the breakout?
Yep.
And then the point that I wanted to make was that here's gold in US dollars. We mentioned before, we have our target back to new all-time highs. And people were like, man, do you really think that gold can go all the way back to where it was in 2011? And I say, well, we're only referencing gold price in US dollars. But if you look at it price in Japanese yen, it's been making new all-time highs for a long time now. If you price gold in Canadian dollars, it is also making new all-time highs. If you price gold in Aussie dollars, it is also making all-time highs. I think you get my point. Priced in euro, gold's already making all-time highs. So to suggest that gold in dollars can get back here when it already has in all these other foreign currencies, to me, look at it compared in relative to South African rand, which the gold mining community really appreciates gold price in rand. Some people might be like, JC, why are you pricing gold in the South African rand? And it's because the gold mining community really appreciates that. But anyway, so it's on my list. And obviously, like the others, making new highs. So if the gold miners, this is the gold mining index, GDX, if we can get a breakout above 31, I think that would be sexy.
I like it. Yep. If it can make it there. I think I already know what you're going to say about this one, but why not we pull it up anyway? And by the way, George, let us know if you wanted us to drop, if that was okay on your RQQQ or not.
How's my hair? I haven't gotten a haircut in a minute.
Oh man, you got to get your barber to come to your house.
Is that what you're doing? You guys are fancy, Laguna.
Well, he's the man. Shout out. His name's Rock, ROC. And the guy's like 6'3", just jacked, tattooed, and he's a barber and he's really nice. He's like the nicest guy ever. And yeah, he came and hooked me and my son up. So, all right. So we got NLY, Annaly Capital Management. So pretty sure I already know what you're going to go here, but I'll throw this up for Lisa.
Man, talk about a real piece of crap, huh? I mean, I say that respectfully, of course.
Of course. Well,
of course, but man, this is something.
This is real something here.
This one's special, isn't it?
It is. That's why I said I kind of already know. I've got it pulled up here on my ends. So figured I
mean, listen, this is the stuff that we're looking for. We're looking for the biggest pieces of crap out there, right? We want this is not an environment where we're buying the best of breed and, everything is great and, rainbows and butterflies and secular bull markets and blah, blah, blah. No, this is not that. These are double black diamonds, on a cold winter, windy day.
Yeah, it's all icy and cold. Yeah.
Yep, right. That's what's going on. So, and this is no different. Obviously, this one certainly got the memo that things are not good. And then basically, as you can see here, if it's below $7, I mean, this thing's just an absolute mess. This former support is now overhead supply. Momentum's in a bearish range. It's probably making new relative lows if I had to guess. Let me pull up the data. We do have the technology. I would imagine, based on just eyeing it, that it's probably making new all-time relative lows. And yes, of course, it most certainly is. So I'm fading this all day. If it's below 7, there's probably pretty good support at 0.
Yeah, that's the funny thing about 0 there. Yeah. All right, Lisa, I hope $7 is your target on LY. Don't even touch it. Don't even look at it.
This is what we call frowny faces. Look. So this is a frowny face, right? We want to be selling frowny faces.
Yeah, it's so sad.
Right? Yeah. Like, is this what you want to buy?
No.
It's just sad. It's just sad and miserable.
Yep. I don't like it. So, Lisa, I hope that helped. Let us know if you need anything to clarify that on. That'd be really great. Jeff said, okay, thanks. That's good. We've got a whole smorgasbord here of ticker symbols that you get to pick. I don't know. Can you see this, JC?
I see FCEL, I know, NRZ, Netflix, CCL. Woo! Let's just do that just for shits and giggles.
All right, I'm pulling it up myself.
Woo!
Oh yeah,
that's really something.
Look at this one. Oh, you're gonna like this. This is thanks, Minaj, for adding that in here.
How am I supposed to have dinner after watching looking at some of these charts? You know what I'm saying? Like, come on.
I was gonna ask you if you get physically upset. Do you allow it to emotionally get to your core?
You know what I do? Like sometimes when I'm going through conference calls. Like I tell people, okay, if you have a weak stomach, like just look away, or like I remember one time this GE chart when GE was breaking down, it was like the only stock in the market that was breaking down and all the other stocks were breaking down. We're super bullish. And then I brought up the GE chart just because I felt I had to, because I'm like, this is the only idiot that's not going up, and then I blocked it. Like, like in the old days, like the Playboy used to be like blocked out, like the cover in the mail. Right, I basically put a big block in the chart so like nobody could watch it because my dad, like I was a baseball player when I was a kid, and when like a bad hitter was up that had like a terrible swing, he would tell me to look away because he didn't want me to pick up bad habits. So that's basically what I tell my clients when there's really ugly charts. I'm like, listen, look away.
Don't look at it. Yeah.
This
You
is
know, they
not what you
say
want to be buying. No, no, no.
I don't know if this is true. I've never met him. If I ever do, I'll ask him if this is true. But they say that Tiger Woods never watches somebody else's swing for the exact same reason. Doesn't want to see a bad swing in his head, or he's going to repeat it, you know, or he's afraid to. So I'm, again, don't know if that's true, but I wouldn't doubt it from the goat. Yeah, right. I believe it too.
Yeah.
All right, so go ahead and break it down. You got CC here. I'll put this back up on the
Carnival
screen.
Cruise Lines, you know, for me, I wouldn't want to go on a cruise even if there weren't a bunch of sick people on it. Like, I just can't imagine being stuck in a boat for 7 days and like I can't even have dinner where I'm at the place I'm going to. Like, that's why I'm there, to have dinner at the place. You want to have dinner on the damn boat? Like, that doesn't make any sense to me. And they're expensive, dude. So expensive. So no thanks. Listen, we're flirting with those all-time lows. So I guess if we are, man, if we're above 10, you know, I guess not all is lost. Like, there's still some glimmer of hope there somewhere, I guess. I have friends in Miami where I grew up, and, you know, there was obviously a lot of cruise line employment in Miami, and they keep asking me about it. I'm like, don't you guys see charts of like Amazon and like Google making new highs? Like, why do you have to buy the worst piece of garbage? And it's, you know, it's smart people, you know, really, really intelligent, educated, you know, people making good money, and they just think that, you know, this is cheap, and they don't realize that, like, we don't want to be buying this crap. We want to be buying the stuff that the market already agrees should be going up. So that's really what we're looking at, and I'd rather be shorting the stuff.
Well, let's talk about that for a second. I mean, a lot of people think they get confused. Is that a price like Carnival Cruise, right? The stock price is low. That doesn't mean that it's undervalued because the price is low. Yeah. But I see the same thing. I get people who will text me, you know, hey, you know, do you know what do you think about this? Or I'm gonna maybe buy this stock. And they send me something that, because, you know, it hit all-time lows, or it's close to hitting all-time lows, or, you know, 5-year lows or whatever. And that's the reason for it, is they think it's super cheap and it's on discount, and then they say it's undervalued. And folks, that's not what it means, that it's undervalued. The price is being that you see there is being represented on what the market believes that it's worth. It's not necessarily meaning that it's undervalued. Sometimes it's both. Sometimes it's undervalued and sometimes it's overvalued, but that doesn't mean it is. So just be careful of that, because I do see a lot of people make mistakes.
Look at this. The joke in the last bear market back in 2008, the joke at the office, I worked on 46th Street and Park Avenue. The joke was that the ATM fee was the price of the stock was less than the ATM fee at Citigroup. That was the joke at the time during the market crash in 08. And people were making the same argument then about the cruise lines today. It's cheap. How low can it go? Guess what? Citigroup is still at the same price it was when we were making that joke, and that was 12 years ago. So, you know, cheap stocks could stay cheap for a long time. It was a piece of crap then. It's still a piece of crap. Like, that's the market telling you nothing has changed. And, you know, Carnival Cruise Line looks like this right now. It looks like Citigroup in 08. That's exactly what it looks like, actually. So
yeah, it does.
And the only reason this isn't a penny stock is because they did a reverse split. FYI.
Yeah, good point.
This is split adjusted. This is still a dollar stock.
Second really, really good point that you made there was it, just because it is low and you think you're going to buy it at a discount, that it could just stay there, folks. It could just stay there. So why? And Gabriel just said, we got to buy stuff that market agrees is going to go up. Pure gold. I'll put up his statement here because he's giving you some love. And I like it. I think that's what we're saying here, you guys, is that, you know, let the market do the work for you. Be smart enough to understand what the market's saying it's going to do, and then just go along with it. George, I think I said out loud GLD, and he said that he meant, can you see this? The comment here.
So he meant Gilead?
Yeah, let's make sure that we give George here some love because sorry about that. I think I mentioned the ticker symbol GLD, but this is what he meant.
Jeremy, how you can confuse the gold stocks.
I know. He's
The
talking about
pharmaceuticals.
Gilead Sciences.
So what we're going to do for Gilead here is that we're going to have a nice little smiley face. I'm going to show you guys in just 1 second. But this is what we're looking for. It kind of looks like gold. In fact, I'm going to pull up the gold chart just to show you how it looks like gold. All right. So here's what we're going to do. I'm going to share my screen. And then here's Gilead, right?
Yep.
Does that look like a Kardashian bottom to you?
Yeah, sure does.
Here we go. Let me show you, right? This is gold.
Yeah, that does look exactly like gold to me.
Come on, look at that. That's gold, and that's Gilead? Are you kidding me? Come on.
Fine. Yeah.
And when you tell me the market doesn't, what do they say? The market doesn't always repeat, but it rhymes. I mean, this is not even rhyming. Like this is like. So anyway, this is not like that other stock. You know, these are bottoms. These are smiley faces, right? We want to be buying smiley faces. That's evidence of accumulation. Edwards and McGee back in the 1940s called this a saucer bottom. You know, if you want to get old school, which I'm happy to do.
Let's do it, man. I love it. And so to answer your question, I believe George was the one. Yeah, George has said, to answer your question, George, do you like Kanye West? Because Kanye West would love that chart. It looks like a Kardashian bottom. That's the joke I'm getting after. He's married to one. So
listen, $80, Jeremy. If we're above $80, you could buy Gilead Sciences all day, have a ball at $80. And, you know, yeah, I think that's probably a pretty good level. $80 on Gilead Sciences. If it's above that, have a ball. You know, I think it could go 115, 120. Not a bad risk reward. It's not the cleanest chart, you know. It's a little messy. So maybe having like tight stops and stuff like that might not be advisable in this situation, but I really like this tight range more recently for sure. And then from a relative strength standpoint, I know Gilead really well because it pops up on all of our screens, James. So all the stuff that we do to talk about like the strongest stock with the highest momentum readings and the relative strength readings, Gilead is always coming up on our scans. I think, I mean, I'm not Mr. Fundamental. My understanding is they have some sort of science that could be favorable in this particular, under these circumstances, which I guess makes sense to me. Regeneron also keeps coming up on the list, which is interesting. I'm sure they're probably up to something too. See, I just assume these things because it's not going to play an impact on as to what we're buying and what we're selling, but it is kind of, it makes sense when we run these scans that DocuSign shows up and Amazon shows up and Google and Microsoft and Gilead and Zoom and like all these stocks that kind of make sense under these circumstances. They're doing really well.
Yeah, they are. Absolutely. It's when you're looking at certain things and all the stars are aligning, right? And again, this is what we're trying to talk about, you guys. When you're looking at stocks to buy right now, make sure why put yourself in these like, ooh, this one's not so pretty, it's not so clean. There are opportunities that just make a complete buttload of sense now. GLD is one of them for, you know, that just there's all these factors that are saying yes. Why stretch yourself out and try to go with a stock that's like a big fat maybe, probably not, a lot of risk that's involved. This is the difference between really successful traders and traders who have a lot of volatility in the balances of their trading accounts. The ones that have a lot of fluctuation, yeah, they may have a 30% gain here, you know, a 40% gain. They've also got the 60% losers here and the 80% is there. And that's because swinging and grasping at straws, right? They're grasping at straws. Why do that, right? Why not increase your batting average by swinging at the pitch you know you can hit? You're not going to wake up and all of a sudden, be a better hitter. Now you think you can hit the curveball. You've never been able to hit the curveball. Know that about yourself. So like go after the stocks that make the most amount of sense. We're laying them out for you, plain as day. Right,
Jeremy, the market wants you to swing at bad pitches. As a pitcher, if I was ever, I wasn't the greatest pitcher ever, but when I would have a moment or two where I was up on the count and I'm up on the guy 0-2, I'm not going to throw a fastball down the middle of the pike. I'm going to throw a curveball in the dirt, see if he chases it, right? The market is constantly throwing you curveballs in the dirt, seeing if you're going to chase it, right? So that's sort of how I look at it, and you want to avoid that and know it's coming. Listen, if you're a batter and you're down 0-2, you think I'm going to throw you a fastball down the pike? No, I'm going to throw you garbage, see if you swing for it, probably twice. But if you're a smart hitter, you know that already. So it's no different in the market. Expect bad pitches and then don't swing at them.
Yeah, exactly. Why do that? Why waste your hard-earned money on bad pitches? Why waste your time on researching bad pitches? Like, come on, man. Identify. Yeah, exactly. Good. I like that.
Let's look at some good pitches. Look, this is the communications index. Notice how communications did not make new lows. So that's relative strength right there. And then look at Netflix.
There it is. Okay, Netflix. Yeah,
and now Netflix is one of the biggest components in the communications index. And we were buying this at 250. I don't know if you remember last year, basically back at the bottom end of this range. And the bet we were making was we want to buy it at the bottom end of the range and sell it at the top end of the range. Well, here we are now at the top end of the range. So one for the good guys, right? Ring the bell, one for the good guys. So now what do? Now we want to be long only if we're above 406. 407, I should say. But here's the key. This is a different trade. So just because we were buying it last year and now it hit our target, that has nothing to do with now. That's called anchoring bias. When you are anchoring a particular trade to something that you personally did, in this case, buy the stock. That's called anchoring bias. And the market don't give a damn where you bought your Netflix shares, right? Yeah. Or what your initial price target was, or what Fibonacci retracement JC used in some video a few months ago, right? Like the market doesn't care about any of that stuff. So all of that stuff is one thing, right? Buy it at 250, sell it at 400. Great. Boom. That and this one has nothing to do with the other. Now, a new trade that we are putting on is that if Netflix is above 407, we want to be long with a price target of 650. That's the next trade, which has nothing to do with what we were doing last year. And that obviously broke out this week, so we obviously like it.
You call it the anchoring trade?
Well, I don't call it that. From a psychology, I talk to psychologists all the time, because they're friends of mine, like trader psychologists, trader coaches. I study a lot of behavioral finance, because the enemy is not the market or the Fed or the Trump or the this. The enemy is yourself, right? So you have to overcome what's in between your ears if you have any chance at all of making money. So it's important to understand who you are and the way you think, and that's a human evolutionary flaw of ours, is what's called anchoring bias, where you are making decisions based on previous information. In this case, where you decided to buy the stock. Why should you make decisions on buying or selling a stock based on where you bought it? Like, what does that have to do with anything, right? That's called anchoring bias.
I would call that ex-girlfriend bias, right? Like it's like an ex-girlfriend trade where you're just like thinking and comparing your new girlfriend to your old girlfriend and thinking there's some like differences, and they're two totally different people. That was supposed to be a joke. I told on that, but anyway, trying to keep people entertained here, JC. All right, here I have something. I didn't even talk to you about doing this. I think this might be fun, just because we are getting some pretty good engagement here in our chat, and I really appreciate that, everybody. We'll get to some of your questions if we've got time, but I wanted to do something where we can make this a little bit engaged. All right, I know I've got a lot of people from my company watching this. Because of you, JC, we got a lot more people in our office trading and investing, which is really fun. A lot of them are in their 20s and building their little portfolios and nested. So it's been, really fun conversations in the office and in Slack. So I know a lot of them are watching too. So this will kind of be fun. If you want to pull up a chart, okay, you can pick the chart. Make sure there's no, overly giving away technical analysis on here. And I just want to see if people would participate with us and tell us if they would buy it or sell it. And then you can give your expert opinion on the chart. So anyone that you want, you got to tell us what the ticker symbol is, what the stock is, and then and I'll see if anybody can do it. If you're watching from the office, you guys, I would love your participation in this as well, just so we can get as many people telling us what their opinion is. So make it a good one, JC. And again, this is totally unplanned. We'll see how this goes, but I think this will be fun. All right, I see your. I'm going to add this to the screen here. All right. Oh, you made it. I like this mystery chart. I swear this wasn't planned. Did you just put that on there?
We do mystery charts once a week, where we send all our clients a mystery chart and we ask them if they would buy, what they would do, and then we'll reveal it a couple of days later.
Oh, nice.
So okay. This week's mystery chart is my point.
Oh, okay. All right. So look, we had one in the bag, and the timing on this is absolutely perfect. Okay. So I'm going to post, would you buy or sell? I don't know. You just changed the chart, buddy.
Oh, I know. Sorry.
All right. So guys, would you buy or sell? We got, go put it back up.
I'm going. Sorry. It's coming. There we go.
All right, here we go. All right. So would you buy or sell? You got Gabriel. He's saying, let's see. We got Gabriel. He's saying buy on here. Come on. No, we've got Jeff, and we've got Naj and Lisa, George. Know your thoughts on here. If there's going to be a little bit of a delay. Okay, we've got George. Thank you, George. George is saying buy. We've got this, Gabriel's going buy mystery chart all day.
I like Gabriel. He bought me sushi at one of my favorite sushi spots the day that I was on Bloomberg, telling everybody to sell stocks like 3 days before the market topped. So it was all the sushi. Thanks, Gabriel.
Oh, nice. Okay, we got Danielle. Great, she's getting involved. That's awesome. She said buy. And Danielle says, I just buy what JC says. That's nice. We've got Lisa. She's saying buy. And Danielle says, and it works. It is actually true, dude. You're building quite the loyal fan following at our office.
All right.
I'm not going to lie. All right. Andrew's getting involved. Thank you, Andrew. Andrew's saying buy. Do we have any sellers here? Does anybody want to go out on a limb? And honestly, I want you to be convinced if you think you would sell this. Let us know, because we've got a really strong bias. This one does have a lot of your markings on this, and I've seen enough of these to indicate some leeway. Maybe you got clients who've seen a lot of this too that are putting their sense in here. I don't think we got anybody that's saying sell.
Well, I'll tell you what, I actually didn't even know what it was when I showed it to you, and I text messaged Straza, one of our technical analysts, because he's the one who put it together. So I'm finding out what it is, just like you are. It actually hasn't been revealed. Tonight is the big revealing, as a matter of fact, for those of you. So it's going to be a whole breakdown on All-Star Charts about what this is. But this, as it turns out, is an equally weighted chart of the MAGA stocks, which are MAGA, Microsoft, Apple, Google, and Amazon. MAGA, which are the trillion-dollar companies, or the ones that were there at one point, I should say. So the trillion-dollar companies, that's what this says. Not the stocks that Trump likes, but the stocks that are above a trillion. Not to be confused with other sorts of MAGAs.
Nice. Charles was close. He's like, is this the SPX?
Yeah, but it basically is the S&P 500.
Yeah, that's why I said he's close. He's basically
the biggest four.
It's not basically is. Nice, Charles. Way to go. That's I don't know. Do you know who Charles? I don't know who that is, but it's a pretty good.
Charles,
I like that. Do you know if he's a client off the top of your, if you're a client of JC's, let us know, Charles, because that was really good. That was a good response. So break. Are you going to break this down right now? Or are you going to give your opinion on this thing?
Well, to me, I'm looking at former resistance over the last several years, and that's turning into support. So to me, former resistance turns into support. As long as we're above those levels, I think you can own these stocks, and they've done very well for us. Not this one, but Netflix, Apple, Amazon specifically. More recently, I didn't even realize Amazon was up so much, and I was getting a text message from a client like, JC, you're the man, like all these things. And I was like, what did I do? He was very, very excited, to say the least. Chris down in Texas, as a matter of fact. Good dude.
Nice. Charles is a client. Hence, that's why he would know. Way to go.
There you go. Well, you're here to hear before their big revealing. Here, let me see if I can.
Nice job, Charles. Let's test you, JC. Right? You got people. This is the benefit of working so closely. Is you start to get really, really good at technical analysis yourself. So, thank you, Charles. Thanks for commenting, guys. This is so much more fun, I think, for you and for us to get these comments intermixed. I'm having a good time.
For me, it depends on the client. Some people are huge nerds and they just want to get better and look at videos of charts and look at charts and like me. I can't get enough of this stuff. And then some other people are like, JC, you do it. Because I'm like, oh, you love charts. Why don't you get your CMT or whatever? And they're like, no. I have a family. I have 4 kids. That's why I pay you. It's good money. It's great. Thank you. That's enough for me. So it just depends. There's no right or wrong answer.
Yeah. You got Charles saying here that boy got me trained. Yeah, he does. JC, you're got me trained too, man. I'm telling you. It's like every time I get to do one of these things, I'm in what I know. And it's true. That's the thing about what you got going on. For those of you who are not a client at JC, is be either one. You could be a big nerd, a big geek, and want to know everything that you can about technical analysis to become a better trader, become a better investor. Trading is done some amazing things for my life. I wouldn't be where I am today if it wasn't for my background. JC, your entire career, like every penny you make, revolves around technical analysis. And so you've got a amazing wife and a baby on the way, and you're like doing it through technical analysis. And so that's one direction. And you've got your staff. I mean, the way that their lives have changed. I got them in here what they were doing before they met you. And now they've got this whole career built because of you and what you've done with All-Star Charts through technical analysis. What is that whole end of the spectrum? So what All-Star Charts and you, there's a lot of people there who are thinking, I believe in this. I actually can. It's science. There's data behind it. There's no, 8-ball or crystal ball that's going to tell you exactly what's going to happen tomorrow. But you also don't have to be an idiot and be an article trader and just go with news is thing. There's a good there's actually a systematic way, and the definition, or what I mean by systematic: repeatable, scalable, profitable. It's got to check those 3 boxes in order. In opinion, it's not worth my time unless it's one of those 3. It's got to be all 3 of those things, And you're able to. Then there's the other end of the spectrum. Look, you can go and hey. You're not. No, I'm not gonna go look at 5,000 charts a week. Nope, not doing it, bro. Like, love you, man. I'm gonna go play golf. I'm gonna teach my kid how to ride a bike, dude. I'm gonna whatever I'm gonna be into. However, you're smart and I like what you have to say. So just spoon feed me these trades, spoon feed me these opportunities, and I'm yours. I will keep giving you money if you could do that. You know what I mean? So there's that end of the spectrum. And you retain your clients month after month, quarter, yearly. If you don't mind, Charles, how long have you been a client for? I would love to know if you're new or if you've been around for a while. If you feel free to drop it in there, that'd be great to hear. But, how long have you been around for? Because I know that once people get to know you, JC, and they become a client of All-Star, I mean, people never leave, bro.
It really has been just an amazing blessing because everywhere I go, pretty much every city in the world, I have, clients and colleagues and, enough people to put on an event and, have a nice dinner with a bunch of smart folks and, go grab beers. And, some cities more than others. Obviously, New York, there's more. London, there's more. Singapore, like the obvious Hong Kong, the obvious places, we have bigger audiences than maybe some other areas, like maybe like Dublin or Amsterdam. While there's a lot of traders, there's nowhere near the community of something like a London or a New York, but still awesome in its own way. Like I remember being in Dublin, gave a presentation, and then we just go to the local pub underneath, grimy dive, with a bunch of dorky Irish traders, talking about like Sean McLaughlin sounds like a great Irish name, like they love Sean over there simply because of his name. I mean, it's just so fun, going to Toronto, Vancouver, Chicago, San Francisco, Dallas, Houston. It's just been really, really an amazing experience. And then for me, Jeremy, I mean, you've seen me do this a million times. I could, like I said, I could draw these charts for you. So for me to go up there and explain how we approach the markets or whatever, dude, I'm happy to do it. It's easy for me to do it. I've said it thousands of times. Where I win is in the conversations that I'm having prior, in the conversations that I'm having afterwards, in the relationships that I now have that I could tap into at any moment and be like, hey, I need the best sushi place in Shibuya in, Tokyo, open on a Thursday, and I need it now because I forgot to ask you a week ago, like those are the relationships that I'm able to, have now. And then it goes both ways. Like, JC, I'm in New York. Like, where do I go? Like, it goes both ways. And that's really where the big victory is, I think. I mean, it is for me selfishly.
Yeah, and I think it's in this stuff like this. He says, about 18 months, my biggest regret in wealth management career is not finding this discipline sooner. I mean, so, right? It doesn't get any better than that, dude, hearing responses like that. And you're part of that journey for these people. And, I agree, Charles, I was also in the financial advisory space too. And so I remember getting into technical analysis and changed. So that's got to make you feel good.
I appreciate that, Charles. Yeah. Rayos. Gabriel wants to go to Rayos. Yeah. You and everybody else. Wait in line, buddy.
All right. Well, do you have, I want to drop a link in here for everybody. If you are not a client, we're doing this Corona special, this COVID market watch, for a lot of different reasons. The biggest of them all is because, look, guys, there are a lot of people out there who want to be these, renegade traders and, make all this money because of the strike while the iron's hot. A lot of people out there that are scared to death and they want to be able to protect your portfolio. Everybody in between. So we're doing this to answer your questions, have some fun, bring some laughter, connect one another in a way, do this social distancing, but more importantly, to introduce you to JC All-Star Charts. And he's put together a really, really great introductory offer for first-time people. So if you're not a client of his, my team just linked in there for I'll put it up on the screen, but they just dropped it in the comment section. So you guys on that link, that'll take you there. You can also, if you're watching this and it's not live, you can go ahead and copy that link and go there now. And says, thanks for providing this. Of course, man, thank you for attending and everybody else for attending. This means the world to both JC and I. This is what we do. It's our passion, is to help people and to educate people. And so we really appreciate all your feedback. It's been great. So yeah, so I would go and take a look at this. Check out this pricing. If you're not a client, you won't regret it. JC puts his money where his mouth is. He offers a 30-day money back guarantee, no questions asked. You get to sign up, check it out, see his newsletters, see his signals, like it, no problem. I don't know, not very many business or companies will do that, put their money where their mouth is, but you do, JC, because you're all about adding that value. So I commend you for that, brother.
No, I appreciate that. And listen, I'm happy to do it. This week was, Charles, Victor will tell you, this week was our conference call. It's my favorite thing to put together. I really enjoy the process of putting it all together. It's about 130 charts. We talk about everything all over the world, all the indexes around the globe, emerging markets and developed, all the U.S. sectors and individual stocks within them, interest rates, commodities like gold and oil and others as well. And then, of course, finding some individual opportunities on the long side, and then on the short side too. I mean, listen, I can't guarantee you that I can tell you where the S&P 500 is going tomorrow or next month or next quarter or next year, right? The good news is that nobody else can either, right? It's a level playing field. What I can tell you is that there will be stocks that go up a lot. That is what I can tell you. What the indexes themselves do over the coming quarters, we'll see. We'll take the data as it comes and we'll make the best decisions we can. Right now, for example, we're fading them. Who knows, maybe a month from now we'll be buying them, or several months from now, but I'm sure there are times to be buying stocks, times to be selling them. In this environment, I think there are going to be winners and losers, as there have been, and we want to be selling those losers and taking advantage of them. You know, Jeremy, they say you shouldn't kick someone when they're down, but the truth is that's actually the best time to kick someone is when they're down, right? So that's what we're doing with by short selling the small caps that have been down for some time. Kick them and make sure they stay down. And, you mentioned earlier about people, clients and stuff like that, that they have, you said play golf or family, teach my kid how to ride a bike. A lot of people, a lot of our clients, even the traders, advisors, all of them, they have other lives, not to mention the businesses that they're running, whether it be a trading business or an advisory business or a trust or a pension, whatever it is. They all have what they do, and then they manage money also, or try to manage money or try to make decisions. For me, this is what I do. Like, I wake up in the morning, I pour myself some coffee, I put on some good music, and I just start ripping through charts until it's time to go home and have dinner. Like, that is what I do. Like, I don't do something else, and then when I have time, I look at the charts. Like, no. I look at the charts, and then hopefully I have time in between to do some yoga before getting back to the charts, right? The goal is to get away from the charts, not get to them. So the charting is not the issue here, dude. So that, for me, is the real goal. Try to go through as many charts as possible, present the story, and then present the opportunities for those who have other things to do, both run the business and, the social stuff, family, friends.
Yeah, I mean, it's the reality. Look, you guys everybody who's watching here, we have full-time careers and lives. And if you expect that you're going to be able to compete, with Olympic athletes, right? If you think you can, you run, okay, let's say that, you run every single day, right? Every single day you run for 30 minutes a day. And you think that for some, for some reason that you're going to be able to go and win in an Olympic race, unless the Olympic athlete is down and you're kicking him on the ground, you're going to beat him in a race. Different analogy, by the way, kicking somebody when they're down. I get what you're trying to say, but we're not advocating violence, but the underlining principle is the same.
Jeremy, if we're short the stock, we want it to go to zero. I don't care what the implications are. We are merciless. If we are short the stock, we want it to go to zero tomorrow. We're not thinking about companies. These are stocks. It's letters and math. That's all we could think about. The implication, listen, if it's going to zero, it's going to zero whether we're short the stock or not. So we might as well, take advantage of it, is how I look at it.
Beautiful. Well said. Man, this is too much fun, and I never want it to end, but our time is up, JC. It has been an honor and a privilege. We're coming back to you. As long as the quarantine is alive, we're alive, and we're going to be bringing this to you guys every single week. Do me a favor, if you're not watching this live and you had questions or comments about this show, how we can make it better, ticker symbols you want to go over, how All-Star Charts works, put them in the comments below. Did we do a good job? Give us a thumb up. Follow tradestocks.com. Check out allstarcharts.com. JC, you are amazing. Thank you for everything that you do, and I will catch you next week, my friend.
I think you guys need to check the tape. What did Jeremy say? He said, as long as we're at home and we're alive, we're going to be coming to
quarantine. I said quarantine. As long as we're in this quarantine.
As long as we're alive, we're going to be having these conversations about the market.
It's true, actually. I don't think we're gonna. I'm gonna be bothering you forever about what I'm gonna send you stock charts, forever, dude. So no, you're awesome, man. Thanks again. Maybe I'm a little overzealous. I'm having fun, but
short the little guys all day. Fade them, feed the ducks all day.
There you go, guys. I'm gonna put them in the comments, right? Feed the Ducks.
Spray
Boom.
them. Spray them all over the place.
Do it. Feed the ducks. That's it from JC and Jeremy. Thank you guys so much. JC, thank you, my friend. And I'll see you next week, man.